Hey, what's going on, guys? Welcome back to my channel. This is Blood Phantom 81. So in this video, I'm going to be revealing my largest holding, and as you guys can probably guess from the title, that is Realty Income. So let's just jump right into the video. So my Realty Income position now sits at $19,000, which represents about 10% of my entire portfolio right now, cash included. So my average cost is around $53, and as you guys can see, I'm currently up about 18%. I was definitely scooping some of Realty Income up while all this, bad stuff was happening here in March and April, and so that's why I have a pretty good average cost. And then if we take a look, so I do have some options. I sell premium like all the time now. It's like super addicting actually, to sell calls and puts. Especially with money that I'm not investing in, or with positions that I like long term, but still want to make a little bit of extra income on those positions. And so, as you guys can see, I have some options open right now, and they pay pretty well actually. They're actually real comparable to the dividend that I'm getting from Realty Income. So let's go ahead and take a look at what my dividend income would be. Now with my increased position, because on Realty Income I've actually been increasing my position. I bought some last night, or I should say yesterday morning. I bought some here on August 25th. Actually, I bought like 50 shares on August 25th. And so little by little, I've been increasing my position. And so I'm going to explain why in a second. But what I want to talk about right now is dividend income. And so this is sort of why Realty Income is like one of the best all-around investments. I would say that Realty Income is probably my top three or top five favorite investments, where some of those other investments would be companies like Apple, Johnson& Johnson, and 3M as my top three or five. But yeah, so here we have 23.35 cents per share. So let's go ahead and take this number and then we'll multiply it by the amount of shares that I have. And then we can get my projected dividend income going forward. So the number of shares that I have is about 301. So let's go ahead and multiply that by 301. So that's about $70.28 in dividend income, and that's not including all this other stuff I'm getting. So one of my sort of side goals recently has been trying to get at least $100 a month from a particular holding, and so now Realty Income has entered that realm. SPHD was another company that also gave me that. And I try to do this without going completely all out, right? The two things that I try to watch out for is, can I get a good yield on cost? Because whenever you buy a stock at a discount that pays a dividend, you're getting in a way better starting yield than you would if you wait until it recovers. So that's why buying the dip is so important for dividend growth investors. Yes, I'm more of a total return investor, but I do really like dividend growth investing as well. And so, yeah, so why did I start scooping up some more shares of Realty Income? So let's go ahead and take a look at Realty Income. By the way, I had DGRO on the screen. I was doing some research on DGRO because of my buddy Jerry over at GW Life TV. And I even had it right on the screen, so feel free to check out GW Life TV. I will give him a more extended shout out in a different video, but yeah, I just wanted to point that one out. Anyway, so yeah, so here's Realty Income. And so why did I start scooping up a lot of shares of Realty Income right now? In my opinion, Realty Income is sort of giving me that look. You guys know what kind of look I'm talking about, right? Where you take her out for dinner, you guys have an awesome night at a nice restaurant, you make good jokes all night long, and the night is coming to an end, and she starts to give you that look. And so that's exactly what Realty Income is doing right now. It's sort of playing coy. It's been consolidating in this range. Obviously, has way more bias towards the upward side of the range, so there's more demand at this point. And we have the 200-day moving average hovering here. And so when you have areas of resistance that sort of act together, then the eventual break of that resistance is generally pretty strong. And so in my opinion, it's just a matter of time until Realty Income breaks towards one side or the other, and obviously my bias is to the upside. And when you factor in the 200-day moving average at this point, I think we're going to see something of an explosive move. I mean, not like explosive in terms of tech, but explosive in terms of REITs, I would say. And so, yeah, that's sort of why I feel like if you do want to get into a position of realty income, at least from my perspective, right? This is not financial advice, but from my perspective, I was like, if I want to actually have a decent sized position, get it to $100 a month in income off this one company, then I'm going to have to get in now. And again, it only represents 10% of my portfolio right now. So, I can just as easily make more money off of other companies, right? It doesn't take like a huge investment. But yeah, so that's sort of why I got into realty income now. And one point I want to make too is I know I always bring this up, but the idea of the market sort of trading off, right? You guys have heard of sector rotation from my channel, probably other channels, but it's just so crazy how well everything plays out. It's almost like an orchestra where there's like a composer that's saying, okay, now this group plays, right? Like the bass, the drums, whatever. I'm more of a rock band type of person. I don't know how orchestras are divided, but yeah, let's say the composer would say like, okay, now the bass goes, now the altos go, now the tenors go, and so these are the different sectors of the S&P 500 and just the market in general, right? I mean, now we're starting to see REITs pick up, and as a bonus, I do want to show you guys financials which is also giving that look basically. So we're hovering around the 200-day moving average, and honestly, it looks super, super similar to realty income. And so I classify both these as lagging sectors. And if you guys haven't seen my XLF video, you guys can go ahead and check that one out as well. We talked about how one of the reasons why XLF is lagging so much is because of big bank stocks. However, from a sector rotation point of view, and in terms of getting into a sector that's lagging, that's about to break out, I think it's totally fine to start dabbling into some of these larger banks and the XLF constituents. Obviously, like when you're investing in a bank, you have to keep in mind that, like, let's say we do break out from here, right? Like, what do you do after that? Well, I mean, it's totally up to you. I know a lot of folks watching this video may not be short-term traders, and that's totally fine, right? But you sort of have to get creative with how you want to take advantage of this. Me personally, I'm probably going to start scooping up JPM Chase in different ways. I would say I usually don't talk about options, but yeah, I'm going to start scooping up some leaps on JPM and to take advantage of that. And then of the shares that I do own, I might sell covered calls in them. I might sell cash secured puts on them. Just a variety of different ways to benefit off of a breakout that I believe is going to happen. And so, yeah, I think that's where I wrap up the video. We talked about realty income as my largest holding, and we talked about like a bonus sector and just sectors that are breaking out in general. And the last thing I want to touch up on is realty income is sort of like, I wouldn't say the perfect investment. That's a very, very strong word to say, but it's definitely one of the best overall investments, and especially in this market environment where, yeah, I guess I started shifting away from tech as my focus right now. It's just what my strategy is, right? I only like to buy things in high probability scenarios, and when tech is as extended as it is, I don't feel comfortable opening up new positions right now, having to babysit those. Um, Full disclosure, I do day trade a little bit more now, so I am day trading tech stocks, but really it's not as much of a position as some of these other companies. And so, yeah, just I am being some more nimble. I would say that, like, my goal of hitting $200,000 is like right around the corner, obviously, and to be honest, it doesn't even feel that good. And I'm not even saying this to like brag or humble brag, whatever. Like, I'm so cool, right? It just genuinely doesn't feel like that big of a goal. Obviously, with how the markets performed this year, you could have bought anything really and done well. And yeah, so I don't know if I'm gonna even make a video about it when I eventually do hit 200K, or if I should just raise my goal a little bit more to something a little bit more difficult by the end of the year. So yeah, I'll consider both of those things. But for now, that's my update, and I'll see you guys in the next video.